Welcome everyone to the global macro update. This is going to be the live version, and then we'll post the finalized version on our YouTube like always, but we're going to let a couple moments by for people to show up on our TikTok as well as our YouTube. But we will be recording this and posting it on our YouTube at the end of the video. So if you've missed some parts, you can always watch it later. And also, for anyone who is watching this post live on the live that we post on our YouTube, you can ask questions before the video or during the video, and we'll get to every single question at the end of the video. So we'll go through the entire video, we'll go through the news section, and then we'll go through the charts. And then we'll go through the questions that people are asking throughout the video. So I will go through them. I may not answer them right away, but they will be answered. So now let's go to the global macro update here. Let's start it. All right. That's the first thing we're going to be talking about. There we go. Just have to get the feeling a little bit more stable. All right. Let's get this going. Welcome traders to another global macro update. In this video, we're going to start off with the news, primarily discussing where the $2 trillion that the Fed is printing is going. We have a nice infographic showing where the funds are actually going to be going to, as well as a little bit of a discussion before we dive into the infographic, and then we'll go straight into the charts, going over gold and silver ratio, as well as the dollar index and the S&P. So first, let's start off with this news topic, which is pretty important, and then it'll also go into the S&P and how I'm using the fundamental analysis and the stimulus package to potentially create a opportunity where I have a long on the SPY. Because of this new stimulus package, I do think that there's going to be more people who are a little bit more bullish. For the short term, I do think that it will go down, but in the short term, I do think that this rebound does have a potential opportunity for the upside. Obviously, this is counter trend trading, so you want to lower your position size. But without going too far into it, let's dive into the news outlet first. So this is talking about $2 trillion. Here's where all that coronavirus stimulus is going. So let's read into it. So $2 trillion, about 17 Jeff Bezos, 2 Alphabets or Google, a couple Apples, 400 Dallas Cowboy franchises, 1,000 Wembley stadiums. Yes, it's hard to wrap your brain around how much $2 trillion really is. That's where cost estimating website HowMuch.net comes in. President Trump last week signed a $2 trillion bill to boost the economy during the coronavirus shutdown. The headline number for many was the $1,200 check that will give a lifeline for a big chunk of the population. But there's so much more going on here. Let's dive in. So this is a quote by Juan Carlos Sanchez from HowMuch.net. He's an editor there. It's hard to imagine just how much money is at stake, much less where it's going and who's going to benefit from it. So let's read into the infographic here of the breakdown of the $2 trillion Total CARES Act. So first things first, we see student loans, a sliver just at $43.7 billion, just a sliver of that $2 trillion. So that gives you a comparison of just, like, that's $43 billion, and look how much it's a sliver to compare what we're actually seeing. So $100 billion is going towards hospitals, $1.3 billion community care and community health centers, $11 billion drug access, $0.08 billion FDA prioritization of drugs to get the potential vaccines through the drug trials quicker. The phase 1, 2, and 3 drug trials are very, very expensive. For anyone who doesn't know kind of the different phases of any biotech or any drug going through FDA approval. The first phase 1 is going to just test if it's going to be healthy among healthy individuals. Phase 2 is going to test the efficacy of the drug to see if it actually is going to do what the researchers are wanting it to do. For example, treat coronavirus in this particular example. And then phase 3 is the same thing. You're going to test the efficacy of the drug, but then you're also introducing a larger sample size for a longer duration of time. So basically, phase 2 and phase 3 are going to test the efficacy of the drug. Phase 3 is just going to be a longer duration and for more people, a larger sample size. So it costs millions of dollars to go through this FDA approval, and they're getting private companies to try to create this, because if the government tried to create this vaccine, it would be until 2030 or 2040 that we get it. Surprisingly, governments are acting pretty quickly right now. But private companies will obviously be able to come up with this a lot faster, and that's what they're doing. So they're putting 0.08 billion towards that process. 4.3 billion before CDC programs and responses, and then we can see there is money towards veterans healthcare, stockpile equipment, and other. So that is in total for public health $153.5 billion. Now, the largest share of the $2 trillion is actually going towards individuals, which is great. So we have $560 billion out of the $2 trillion that is going to individuals. This is going to be with cash payments of $300 billion and extra unemployment payments of $260 billion. See, in 2008, they really only had large corporations really get bailed out, whereas now we're seeing a lot of the money go towards individual citizens, which is great to see. They're bailing out people, individuals who are actually suffering, which if you're going to print money and bail someone out, it should be the individuals, not the large conglomerates. So they still get their fair share of the pie, obviously, $500 billion going towards large corporations. We see national security, $17 billion, cargoes, $4 billion, passengers, $25 billion, and that's all from the $58 billion airline bailout. Contractors, $3 billion, other $26 billion. So in total, they're bailing out $58 billion in just the airline industry, and then you see $425 billion for the rest of the large corporations. And it's crazy to think that we're just talking about billions like they're absolutely nothing. But if you go look at some of the TikToks that we've made just discussing the significance from going from $1 million to $1 billion to $1 trillion, it is obscene the amount of money $1 trillion is, let alone $1 billion, right? So they're throwing out numbers like it's nothing. And that's a lot of money. So a lot less for the small businesses in the United States. $10 billion in grants, $350 billion in new loans, and then $17 billion in relief for existing loans. See, what I don't understand is a loan is only going to be credit. It's not going to benefit you in the long term, because you're going to have to reduce the investment going into your business at a later point in time to pay your debts because you had credit before to get through this virus, this issue, this economic downturn, right? But then the large corporations, they were mismanaged. They bought buybacks of shares for years and years and pushed their stock up so then they could make money, the execs could make money, and they weren't saving for a rainy day. They don't even get a loan, they just get a straight bailout. They get free money. They don't have, right, you know what I mean? But then it's a loan, so like the airlines are saying, we won't do buybacks, but they're receiving the money, right? But small businesses still have to pay with, I'm sure, some level of interest. So there's definitely discrepancy with how they're treating massive corporations versus small businesses. And then we got this two last slivers here. State and local government is $339 billion, $274 billion just for the COVID-19 response. And you got a bunch of other stuff for block grants, schools from kindergarten to grade 12, higher education, family programs, and other. And then you got your safety net of just a mere $26 billion, just a small little sliver of the pie. You got children nutrition, SNAP, food banks, and other. So that is how the total CARES Act is going to be divided from the $2 trillion into the many areas within the economy that need this stimulus. So with that being said, you're probably thinking, wow, that is a shit ton of money, and you are 100% right. But the next thing we're going to talk about is actually the possibility of inflation, because I know everyone's thinking, oh my god, that's a lot of money, inflation. But there's two things that we need to consider, right? One is the supply, but then the other is going to be the velocity. And we can see the velocity of money in the United States is slowed to basically the lowest point. And we're going to get our quarterly for Q1 shortly, and we'll see where the velocity of money is in this current quarter. If it's lower, if the velocity of money is going lower and lower and lower, you're not going to see the inflation, because it takes two to create it. It doesn't matter if there's going to be more money within the supply if there's so much more money that is getting stored underneath mattresses in banks, or not in banks, but stored in places that is not going to be in circulation, basically. And if you see velocity decrease, you're not going to see the inflation. But then if you're starting to see the curve of velocity shift from going lower to then potentially going higher at a certain point in time, then you're really going to start to see the inflation push up. Now, another way to track inflation for more of a shorter time frame to get a good understanding, kind of a quarter by quarter or kind of a global look at it, is also looking at the CPI. Now, what is that? Let's look at CPI. It is Consumer Price Index. Let's read what Consumer Price Index is. We have a report for Germany for CPI at 4 a.m. we had, and then we can see the Consumer Price Index as a measure of the average price levels of a fixed basket of goods and services purchased by consumers. So basically, we're going to see how much inflation is for the consumer, for the person just buying their everyday goods. And recently for Germany, they actually had a lower CPI than what their consensus was. Wait, let's look here. So it was the same as consensus. It was lower than prior. So their inflation is actually going down from what they're expecting. So in a sense of potential opportunities for markets that wouldn't be super bullish for gold. Now, I do have a small long position on gold, as also kind of a hedge against my long position on the SPY. I do have two positions long, but we're seeing CPI numbers lower than expected in Germany, and we'll keep an eye out for the CPI numbers in the countries, the first world countries that are going to be impacting kind of the world trade. We're not really seeing inflation yet, so we'll look at the velocity of money, we'll look at the CPI numbers, and try to understand when that curve will bend, because at that point in time, then we will start to see the inflation start to kick in. People will want to go into more safe haven assets like gold and silver. We'll see the gold and silver ratio bend going downwards, and that is when silver will be a phenomenal buy in our opinion. So more of a macro outlook. That is what we're going to be looking for, but that doesn't mean that we can't trade the volatility in between now and whenever we get to that point, which could be who knows how long, right? But that's the view that we have currently right now in the global macro sense. We're now going to take a look at the gold charts and silver charts. Talked about more of the fundamental view. Going to get a quick drink of coffee, and then we'll get started with the analysis here. All right, so first things first, let's go back to the daily chart. And then take this off. So as of right now, we're in consolidation. Let's draw our zones here. Actually, I think I'm going to... No, I'll just take this off, and then I'll just draw it from here. That's not a problem. So we got a significant move, both to the downside and upside. But right now, we made a lower high right now. We're consolidating right here, right? So we haven't touched that previous high, 1650, 1680, somewhere around there. So right now we're holding a lower high. If we come back to reach that high right there, that for me would mean a completion, that we're in a consolidation. We'll probably get some level of a higher low, maybe a higher low beyond that, maybe some get level of an ascending trend line. That would be pretty bullish. But if we actually hold this lower high here, I'm expecting either a squeeze here, a squeeze on a key horizontal zone, or there's going to be some ascending zone that's going to provide a squeeze that's going to form a funnel of some sort, potentially something like that, in my personal view, because we see a very significant peak and we see a very significant low. And usually, because of the massive volatility and the uncertainty within the market, I think we could get a bit of a consolidation here to some degree, and then we could get a bit of a squeeze before the next move occurs, because that was a massive move. There's a lot of uncertainty, a lot of bears, and then a lot of bulls coming in at one point in time, especially with, initially there's going to be a sell-off, but then, you'd think, oh wow, inflation's coming in, a lot of money printing, there's going to be a lot of potential inflation coming in, and I should hedge with gold. But we saw a massive dump to the downside. We didn't form the same high, so we're currently forming a lower high. So market structure states that we're at least in a consolidation, and we're not able to form a higher high, so we're not in that strong push to the upside yet, because of just the aggression of the bearish move that took place in February, right, late February, until March, basically. Late March, where we currently are now, but that was kind of the second half of March was that bullish move that occurred. But overall, that's my view of the current market. We got a strong level of support at 1450, strong level of resistance at 1680-ish, and then we formed a lower high. And if we're going to dump back down, then I'm looking for a potential higher low, and then we could form a bit of a squeeze, a bit of a symmetrical triangle. If that's the case, we got to stay patient until that breaks. But I do have a long position. Why is that? It broke this key resistance right here, and we're holding this nice level of a support. And I do see a bit of an ascending support, as we can see right here. We got a low, a higher low, a higher low, and a higher low connected with a trend line. And after this push to the upside, we got some level of a market breadth, right? Because after a massive move, we got to get some level of a pullback before the next impulse pushes to the upside. So this is our market breadth, and we also have a zone of confluence where we have resistance, nice new level of support. We have support. So we have a zone of confluence at around the current level of support that we're holding right now. I waited until there's confirmation of buyers in the market. We got a hold once, twice, 3 times, and we are getting some level of a pullback, but at the end of the day, we'll see if that is able to hold. I do have a smaller position, and I just have a nice 2.8-ish risk-reward trade from the lows of this support to basically hitting this level of resistance. And then it's just a matter of if we're going to break above, retest, and then push above, or if we're going to hold this resistance again and not actually make it above. So basically, that's going to be my view of the market right now. I see the price potentially coming up at this point. That's why I have a long in, and it's just a matter of if we're going to break that zone or not. But I wouldn't be too surprised if we do break that zone and then come back to form a higher low. If this is going to be a lower high from here, we could probably see a higher low from here as well. But from here to here is not really a significant move that I'd want to trade. If we are seeing some bearish momentum in the metals, I want to look at silver. Silver is going to be my bearish momentum, and gold is going to be my bullish momentum. Right now, I still see a possible move to this zone for gold from these lows because of the zone of confluence like we see here up to this zone here, just because the market has some moves in waves like this. We just had a massive push to the upside right here after the huge squeeze within the 1440 zone right there. That was a massive squeeze that we captured and called from this zone here to a move up, and then We broke this one, which was significant right here, that key resistance turned support, and now we're holding this resistance, which is our next level, as our new level of support. Also this zone right here. So it does seem to me like this is a good place to hold a pullback, because if we go like here, previous resistance, new level of support, wouldn't be surprised. And then we got the pullback here, and it looks like if we're just able to get that next wave, next leg up to the recent high, which is to me a high probability situation, because the move from the 1440 zone around here was so significant, broke major zones of resistance without a problem. We're going to get some level of a pullback, but I think that momentum is going to carry at least to the highs here, and then we'll see how it reacts. But I'm just going to take my risk reward and get out of the market and see how it reacts to that zone. I'm always trying to let the price, I'm always going to be the follower of the price. Like if you're dancing, I'm never going to try to lead the price. I'm going to let the price lead me. I'm always going to be the follower for price. I'm not going to say you price are going to go here. That's when I get slapped in the face and say, no, you don't get to decide. I decide. The market is always the decider. I'm just the one trying to capture little clips here and there because the market is giving me a chance to know what it's doing or speculate on what it's doing. I never know 100%, but it's speculating because the market is giving me some dance orientation that we've choreographed in the past. When you put your left leg here, right leg here, and right elbow here, I'm going to swing to the left, potentially, right? A probabilistic chance. And if I see those moves happen, I'll take that leap of faith because the market has proven that it's done that in the past, and I'll move with the market, right? So that is what we're trying to do. So that is gold. Let's bring back the chart here and go on the 1 hour time frame. We see that on the smaller time frame, we see a low right here, higher low, higher low, higher low, higher low, and then we're getting these nice, very, it's in consolidation, right? So it's very choppy. So I'm giving the price room, but we get these waves, boom, boom, right? You're getting these waves, in my view. In the first wave, one resistance touch, two resistance touch, three resistance touch, break to the upside, right? It's very significant that we broke the resistance. Same thing right here. Little mini bull flag right here. Let's take this away. Mini bull flag, as we can see. Another break towards the upside, right? So we're getting these mini pushes. We're getting consolidations, push, consolidation, push. And now we're getting a consolidation. It kind of looks like a double bottom right here. We're getting a low, second low right at our support there, touching that zone. And if we're able to test this 1640 level as another level of resistance, I do think we'll potentially break that zone like so. We'll probably get some level of a retest and then a blast off hopefully to the $1,700 range. So that's going to be my market analysis for gold. Already entered, so we'll see where it goes. And yeah, not much more to talk about on gold. Next thing to look at is silver. We've already touched on that gold is more of a bullish bias, and we've explained why. And now we're going to explain why silver is more of a bearish bias. And here is why. See these major zones that we currently have within the structure of the market. We are retesting that zone right now. So we see right here, we have a high, and then we have a lower high, lower high, lower high. Let's see if I can connect it somewhat straight right around here. Very significant zone, right? We can even see it test as support, and then it turns into a resistance all along here. And then we see first anchor point for the horizontal zone all along here. Very well respected. And now we're getting the price that broke down on the weekly, very large time frame, come back very sharply to retest this zone as potentially a new level of resistance. This is why we're so much more bearish biased on silver and bull bias on gold, which is a good thing, right? So if we do get the market to make another leg down, we're already mentally prepared to make that jump on silver. We got a strong pullback, validating the previous resistance or previous support, as a new level of resistance horizontally, and a previous resistance yet again as a new level or same level of resistance. So that is the macro chart for silver, and then look how well we're getting a we got the reversal there, and we're getting our pullback, and now we're getting our nice curved top right there. We got our first major bearish engulfing candle on the 4-hour, and now we're getting our pullback to retest this previous nice level of support on the potential volume distribution phase as a new level of resistance. And this is going to be the market distribution phase right here. There's going to be two cycles. There's going to be the accumulation phase, which is going to be potentially where buyers are going to be accumulating, institutional buyers entering the market, and you're going to have market distribution phases where you're going to have you're going to have institutions getting out of the market, sellers getting out of the market, distributing their assets within the market. And in my view, this is more of a market distribution phase because of the macro location, macro chart, where the price action is on the macro chart. I see this area as such a key level of supply. So in my view, this is going to be a major market location for volume distribution. Saying that, this is going to be the actual consolidation for the distribution. We made a lower low, right? And now we're retesting that previous support as a new level of resistance. So in my view, this is much more bearish, and I'm looking at the market in more of a bearish sentiment. And just looking at market structure, we see higher highs and higher lows, and then now we're seeing lower highs and lower lows. Very, very simple. We see a key level of support, new level of resistance. Lots of indications telling me that we could see another dump to the downside here. But it's, in my opinion, it's too early. I think it's a good hedge for gold, but I'm going to let gold play out. If gold does inevitably push back to the $1,700 zone, we're probably going to be seeing silver at around $1,450. And understanding the situation with the spot price and the actual physical price of being able to purchase silver, there's a huge discrepancy right now. Like if you wanted to actually get a silver bullion in your hand right now, it's going to cost you have a lot more than $14, way more, right? But then looking at the actual price of the digital silver, looking at the ETFs or the futures contracts and all the contracts, looking at that value of silver, it's going to be a lot less. So there is a discrepancy. Either the digital value or the futures value has to go up, or the actual cost of purchasing silver is going to lower. And right now, there is a shortage of physical bullion, physical gold and silver right now in the market. In my view, I think that these digital contracts and futures and all that stuff will go up. So I'm hesitating on calling this a potential short, but if I was just looking at this as a price action play solely, it'd be more bearish for me, and gold would be a lot more bullish. But because of the fundamentals and understanding the commodities market and the bullion market, there's a shortage of actually having bullion to sell. So there's a shortage of supply, and I'm sure at this point there is going to be an increase in demand. Obviously, I'm going to wait until I have a little bit more confirmation for the silver short. But gold looks pretty good, and I'm hot on that, and I've already entered on gold long. Quick look at the gold and silver ratio on the monthly. We haven't closed it, but it's looking pretty close. It looks like we are going to close above the zone. And on the weekly chart for the resistance, we have closed holding that from the previous resistance to a new level of support. And now we are validating the same zone as a new level of support. So, looking at this potential blow off top for this ascending channel, silver could actually go down in value even more because this ascending channel looked bearish, but we broke the resistance of this ascending channel. Breaking resistance is making a strong higher high. Look at that nice surge in volume, surge in the devaluing of value versus gold. It's at the highest point it's been in a very, very long time. And it could have a final blow off top, meaning that silver could be even more undervalued just as a complete capitulation of the silver before we get a reversal, and then we get a strength from the silver because we're getting a more speculative investor looking at the commodities market because of the uncertainty in the market. Gold and silver have been safe haven assets for thousands and thousands of years, and I'm sure I can't say 100% for certainty, but there's a high probability of gold and silver being another safe haven assets that investors will turn to when inflation becomes a problem, like we've seen in history time and time again. So it's both gold and silver. And when there is speculation in the commodities markets, gold will be the kind of like Bitcoin for the different alts, but silver will rise quicker and with more aggression. So gold is like Bitcoin in my view, and then silver may be Ethereum, where it's a little bit more speculative, but it will rise with more aggression, with more speed when it does inevitably rise. So that's going to be what I'm going to be looking for in that market. Quick look at US oil. This is going to be WTI. We made a lower low from the $20 low that we had back in the March of 18th, and we recently made a lower low hitting sub $20 levels, 1940. So just keeps on plummeting down. No real sign of buyers in sight, no real sign of demand for US oil. So yeah, I can't believe we're going below this zone. On the daily chart, we are now closing below this zone. Looking at the weekly, where we are, if we blow past this major level of a lower low support, we could be hitting the $17 range here, not too far from now, which is pretty staggering at where we were at, let's say, the start of 2020, $60 per barrel. We're now coming to potentially $17 per barrel. Not too far from now. So if we break and hold below this lower low formation, that's very, very bearish for US oil. So I'm not going to be trading US oil. Mainly I'm looking at gold, silver, US dollar, and the SPX for the global macro plays. And, I think oil shorting at this point would be kind of getting the crumbs of the short in my personal view. If it does pull back pretty strong like we have in the SPX, we're getting a strong pullback on the SPY right now, and that's great. Large stimulus package came into the United States, pretty short-term bullish because there's going to be a lot of buyers and there's going to be some short-term relief for the economy, but I do think there is going to have that next leg down coming into the market. But for now, we're going to counter trend. We're going to be contrarian. Well, I guess maybe not contrarian because there's going to be more people that are bullish, but in terms of where the overall macro outlook is going, we're going to be contrarian to our view that it's going to take another leg down by entering a long on the SPY or the SPX 500 USD. We're trading CDF, which is contract for differences. We're not trading the underlying equity, but yeah, that is what we're trading, and we'll talk about it a little bit. What we're looking for is another extension to around the 2850-ish, $2,800 zone. Let's look at the larger time frames. Oop, that's not the right one. Larger time frames. So we got our nice fib here, and we got the fib retracement to the 50. So this is a 50% retracement from the candle body high on the daily closure to the candle body low on the daily candle closure, and then we can see that the 50% is around the 2815, which is in confluence with a key previous level of support back in August of 2019, as well as a key level of resistance back in November of 2018. So let's talk about confluence here with the fib levels that we could see pull back. First level is going to be 50%, which is around 2,800, key level of support, as well as key level of resistance back in November of 2018, and support back in November of 2019. So that's going to be our first possible level where you're going to have that pullback and then a crash back down. That's going to be basically where we're going to be taking a majority of our profits for this pullback. The second opportunity, if it does break the $2,800 level, around that level for a resistance, we're going to be looking at, I don't exactly know where this one is. Let me just check really quickly. 2950. That's going to be where the next potential zone is going to be. That's going to be the 618. That's going to be the significant level. And we see initially it was a significant level of support when it was coming down. That was the first leg it held as a support. And then we can see it was a resistance right here, and then it turned into somewhat of a support, not really. Turned into a resistance, turned into a support, and we can see it was respected back in July and November of 2019. So that's going to be the 618 retracement, but I think the highest probability situation is going to be the 50% around 2800. So in that said, now let's break down the 1 hour chart of the pullback that we're currently seeing right now in the market. So let's get our snip right here and discuss what we're currently seeing. So first things first, massive RVOL, right? So there's going to be a lot of buying and selling, a lot of extensions. We got to give that price a lot of room to breathe. In my personal view, when we're seeing these very significant volatile times, I like to lower my win-loss, or sorry, not my win-loss, my risk-reward ratio a little bit and potentially look for the over-exaggeration, the overextension. So let's say you have a key resistance at 2800 or this zone right here. You're probably going to have a high likelihood of over-exaggeration to some degree. So the price is going to go higher than the zone is and then come back because there's going to be more emotion, more volatility in the market. But right now, we have a risk reward of like 2.8-ish, I think. We got an entry right here, and we'll discuss why we entered there. So why did we enter there? We got a bearish move, right? That's going to be the first thing we're looking at. We're in a bear trend. We got a nice entry from here to here as the final breadcrumb of the move, as the final capitulation ending. And then we broke this zone, right? This was that descending zone that we've been holding for a while. Key resistance right here, right here, right here, right here. Many, many times over. So when that broke, that was our first sign that we could see a shift in trend. But we're not looking for just a break in trend, right? We're looking for a downtrend to a consolidation to now a uptrend. So where is our consolidation zone? Where does it start? Where does it end? All of that stuff. In my view, this was the very significant high that we wanted to break. So we went from a downtrend into, when we broke this zone right here, into a consolidation, right? And that's what we saw. In my view, that was a consolidation right around there. We made a higher high, but we kind of like held below the zone. We saw some higher lows kind of come here. That wasn't too valid. But, you know, we saw an uptrend after we broke the zone. We saw an uptrend. And then what I noticed is a nice higher low structure. So we saw this resistance, this resistance, this resistance turning into a nice level of a 1 support, 2 support, 3 support, 4 support. Very valid zone, right? And now we're getting from a descending zone to a consolidation. So now we're getting these higher lows, right? So we're getting higher lows, higher lows. So from the retest, perfect retest of that zone, we saw higher low, higher low, higher low. So we're getting these higher lows push the price up, right? But it's not just the higher lows. We're getting an even greater amount of higher highs. So yeah, we're getting higher lows, which is great and dandy to see. But look at the trajectory of the higher lows, right? It's steady. It's growing at a decent rate. But look at the higher highs, right? Let's close all this. The higher highs is going parabolic. It's getting higher and higher and higher compared to the lows. This is not really a high, but this is still in the downtrend, right? Once we saw this high, then it's like, I'm getting interested. We broke this high. So now market structure looks like it's potentially shifting, right? And that's when we got even the next higher high. So we got a high and then a higher high. And what were we looking for is we got a low right here. So now the market structure is creating higher highs and higher lows. The price action has broken the descending zone. So market structure, price action, both looking really good, right? And what do we see at this zone right here? Where we should see sell pressure within the market, we're seeing a lot of no supply candles, right? Where there should be a lot of supply coming in, we're seeing no supply candles, which is a lack of supply. If we zoom in here, we'll see a lot of no supply candles where we should be seeing more supply because it's a key level of resistance. We're not. So VSA, price action, market structure, all looks good. Now we're super interested, right? We're super interested in a potential trade. We're looking for the highest probability situation to enter in this trade. So we know we're in an uptrend. We know market structure and price action and everything looks good. We're looking for the highest probability entry. We got to squeeze, right? So we know that this support is looking favorable. We've tested this zone enough times that we can depend on it. Now we're looking for some break in trend that we have a high probability of completion because there's a contraction and then there's an explosion, right? There's a contraction of volume, it's getting tighter and tighter, it's a funnel, and then if there's a breakout point where the market has to make a choice, and it's a battle between the bears and bulls, contracting, going from lower highs and higher lows. The price has to make a choice, right? And the overarching sentiment is we're making significantly higher highs and consistent higher lows. So the market trend is on an uptrend, but the sentiment is we're making consistently higher highs. So it's more bullish in the fact that we're contracting, and then we got to move up. We got a little pullback, but not much. We're getting way more buy volume than sell volume coming into the market. That is when we enter. I put the stop loss below the recent higher low, and the extension, the take profit, is going to be at the 2850-ish zone, where it's going to coincide with the daily chart of the 50% retracement. Lot said in a short amount of time, but that is the reason why we entered, coinciding with the $2 trillion stimulus package. A lot of liquidity coming into the market, a lot of money moving around because of this new money coming in. That money is going to, not all of it obviously, but that money is going to be going into the equities market some way, shape, or form with the bailouts, with the larger companies getting money like we talked about. So that is hopefully going to give some short-term alleviation for the equity markets, which will then drive potentially stock prices up because investors will be a little bit more relieved than what we saw down here. People are, talking about the bottom. Jim Cramer is saying, you betting against the market is going against science or some bullshit like that. We're only 20% down, or 30% down, sorry. We got 20% left to go before the next major key level. Even talking about that, let's talk about that really quickly, right? Where's our next major levels right here? Look at the extensions, right? So there is our first major push. Look at where the extension of the 618 goes perfectly in line with the 1540-ish level, which was our key level of resistance back in 01 and 08. Double top. Really, how perfect could it get for a potential zone where you're going to be looking for dollar cost averaging in and around these zones to come back into the market? Really, pretty perfect. I could be wrong, but in my view, this is going to be the next couple months. This is how I'm going to be viewing the markets. Hopefully that's going to be coming in. This is a bit contrarian for my view of the more bearish sentiment, but I think it is going to have a bit of a strong, aggressive pullback to around this zone, and then hopefully we're going to be capturing those profits before we're going to be remaining very patient, seeing how the price reacts to that resistance zone. If it does hold, if we do get some bearish engulfing candles, maybe some breaks of supports and holds of resistances, if we're getting some ascending zones break, testing as nice new levels of resistances, if we're getting some level of bearish structure within this zone, we know what to do. So that is going to be the trade of the SPY. I am going to be looking at TVIX as well. That's just going to be a straight equity or an ETFs trade. I'm hopefully going to see the SPX continue to go up, obviously, because then we're going to be making money in this trade. And as this continues to grind up, I'm going to expect TVIX to come back down, hopefully 200 or even sub 200 range. Ideally, that is, in my opinion, a really good place to be averaging in right there. So, looking in kind of the future, we see if we average in, let's say, at 200, 100, 150, somewhere around there, worst comes to worst, right? You're risking $150. The previous move that occurred went to $1,000. So let's say you lose everything from $100. You're risking $100 per share. If it goes to zero, right? You're risking $100 per share. You wouldn't be risking $100 per share because obviously you're risking a percentage of the share depreciation. You're not going to go to zero. But let's just say hypothetical fact. Let's say you're averaging it at $100 and it could go theoretically to zero. And that's what your risk is. Your reward, it went to $1,000 when this bearish move came in, right? When this first strong push to the downside came in, that was 1,000% move, right? And looking at 2008, the first move is not going to be the most aggressive. Obviously, every bear market is different, but you see in 2008, you see lower high, lower low, lower high, lower low, and then you see the massive smash down, the total capitulation. Same with O1, you're seeing lower lows and lower highs come into the market with huge swings to the downside, right? This is our first swing, everyone, right? Obviously, it's very aggressive, but this is a tiny pullback. We haven't seen a lower high come into the market yet. You could argue that this is a lower high, yes, but you're going to get some structure where it's lower lows and lower highs. Just looking at 01 and 08, 09, somewhere around there, right? So that is what I'm going to be looking for. TVIX is probably going to come back. Maybe sub 200s, maybe sub 100s, maybe even, we don't know. But entering at these lows when there's a high probability of another spike getting a 400% gain, 300% gain, 700% gain. Those risk rewards are pretty damn juicy. I don't know about you, but that is a risk reward that I find very, very interesting. So that is going to be what I'm going to be looking out for a potential opportunity. But right now, we're on the upside. We're on the upswing. We're looking for TVIX to come back. We're looking for the SPY to go up. And the last thing we're going to touch on is the dollar index. This is the dollar index. If you don't know, the dollar index DXY is comprised, I believe, of 60% Euro, 15% JPY, and then the rest is going to be other currencies. But this is going to be the strength of the US dollar. Strong resistance at around 102, 103, somewhere around there. It got rejected very aggressively on the weekly, and it closed actually back within the ascending channel. Very significant rejection. Surprisingly, stimulus package, devaluation of the US dollar. But I do think that when the next bearish push comes on the SPX, we're going to get another surge here. And I think this one's going to be even more than what we initially thought, when we initially got, which again pushed the price up above $103. So we'll see how it goes. That's the more longer outlook trade, but that's basically the dollar index. So I hope you enjoyed this global macro update. If you have any questions, drop them in the comments section below, and we'll be sure to give you an answer. We're not going to be going over TVIX in the long-term time frame every single day because it just doesn't make sense. And same goes for crypto market updates, because if we're doing this every single weekday, it doesn't make sense going over the monthly chart every weekday, obviously. But for hour charts, for 4-hour charts, for daily charts, yes, we will go over those every single weekday because that is very pertinent to our analysis. So thank you very much for watching the global macro update. One thing we didn't do, I will do this before we close it. We haven't touched on the COVID-19 cases. I didn't do them for a little bit because obviously talking about how many people are dying every single day is not super exciting. So starting with it is not something I wanted to do to start off every single global macro update. But let's touch on it right now because it is obviously something that's impacting the globe significantly. Just going over the numbers, total confirmed, we're at basically 750,000 people total confirmed, with Italy absolutely blowing past China in the total confirmed cases. 156,000, almost 157,000 confirmed cases in the United States. Italy breaking the 100K mark. Spain at 85,000. China at 82. Germany 63. France 43. Iran 41. Canada's at 7,200. So we are slowly climbing up. But in terms of the ratio, U.S. is obviously just insane in terms of the global cases. But you can't trust this, right? Like, I haven't been tested. There's tons of people who haven't been tested who might have COVID-19 and actually don't have any symptoms and don't think they have it. So these numbers are going to be very difficult to try to say that, yes, these are the numbers that we're going to be trusting. I'm sure they're going to be significantly more, but yeah, like, what do you do? Is like, you can test every single person, like South Korea doing, and I think that is the right way to do it. But one thing we will be looking for is private equity, or sorry, public equity on exchanges that are going to try to create drugs, going through all the different phases to try to create a cure or some drug to assist with the COVID-19 cases. I'm sure there's going to be some private companies that's going to come up with a treatment for this, and that will go up 10, 20 fold. So we'll dig every single day for information related to that and be discussing within the Performante Premium students, not in just this general YouTube. But yeah, I will keep everyone informed for the Performante Premium. There's nothing related to information right now, but I will definitely keep my head up. Not much more to talk about. Thank you very much for watching. I just wanted to keep a quick, or do a quick update. We see that the total confirmed in the globe is increasing as well, and the total recovered is increasing, but the total deaths is increasing as well, unfortunately. So that is going to be the completion of the global macro update. We really hope you enjoyed this video. If you did, and if you found it useful, please give it a thumbs up, and if you could subscribe if you found this useful, that would be greatly appreciated. So thank you very much for watching. I will be answering all the YouTube videos or YouTube comments and TikTok comments at the end of the video, but at this time I'll complete this global macro update. So thank you very much for watching. Stay safe, and until next time, happy trading. All right, so that is a completion of the global macro update. We will now go into the comments within the TikTok here real quick. So for everyone who goes on our TikTok, we do this every weekday. We do a crypto market update and a global macro update, and we leave all the comments and questions for last. Obviously, we'll be stopping every 10 seconds if we were answering questions, but we will be answering every single question if it's pertaining to what we're talking about every single time. So your questions are not going to be unheard. All right. Hi, how's it going? Let's continue on here. A lot of people. You think there might be any connection? Hello, it's good time to purchase Bitcoin. Connection, I'm not sure what you mean in that. If you can give me more explanation to Spook, you think there might be any connection. I'm not really sure what there is. For connections, what am I connecting? Love Gurus, hello, it's good time to purchase Bitcoin. I personally cannot give you financial advice. I have my own theories of BTC. Check out the newest crypto market update if you want to know my thoughts on Bitcoin. It's not as simple as just, is it a good time to buy, yes or no? There's a lot that goes into trading than just that. Between the virus and China digital currency. That's a hard one. I don't know. That's a hard one. I don't like. I'm very skeptical of governments and central banks and somewhat authority in some sense. I do think that a lot of governments are faking their numbers or are not showing all their numbers. But to say that someone created the virus is a pretty big, bold claim. But I do think some of the catastrophic things that happened in the world have been inside jobs. So it's not like it's implausible or it's impossible. It's too early to tell in my view. I don't want to point fingers or anything, but yeah, if an economy benefits and everyone else suffers, that kind of begs the question of why are they benefiting? Why is it happening to them? But yeah, we'll see. I think time will tell. I think as time goes on, I'll be able to create a better thesis for that potential situation. Can you please tell me about Bitcoin? Not sure what you're looking for. If you're looking for just a simple answer of is it a good time to buy and you're looking for a guarantee, this is not the place for you. I cannot guarantee anything for you, and if a person is able to guarantee you anything, it's probably a scam. So yeah, that's my answer to that. I'm not going to tell you exactly when to buy and sell. Will you tell me about Bitcoin yet again? Happy where you are from. Yeah, I'm happy where I'm from. I love Canada. Canada is terrific. I'm very thankful that the Canadian government and the Canadian healthcare system is pretty well up for the challenge of COVID-19, and everyone's pretty well very friendly in Canada. well, I can't say everyone, but the people I hang out with and the people I associate myself with are pretty well true Canadians. Thoughts on oil? Yeah, I definitely think that it's going to drop more. Like, look at the demand in terms of the globe. Like every economy is in a global shutdown. Cars aren't driving. Things are being shipped. Like, the demand for oil is only going to go down even more, and especially with the oil wars, Saudi Arabia could go down to $9 a barrel. Russia could go down to $14 a barrel. That's including taxes, so they still have a decent amount to go. And, they have no reason not to. I low-key do think that the Saudis and Russia, or I guess OPEC and Russia, are somewhat kind of creating this together because they know that the U.S. is in difficult economic situations right now, whereas Russia is in a very, very great situation because they have a lot of gold. And they can go to $15, $14 a barrel compared to the United States that is over-leveraged, over-debted, very limited amount of gold. And their huge sector in oil is basically restricted to the price of oil being at $40 or higher. If it's not at $40 or higher, they're losing money. They're losing, I don't know how much per barrel, but they're losing money every single barrel. It just doesn't make sense to continue operation. So yeah, it's going to be detrimental for Canada and the United States. I'm Canadian, so this affects America and Alberta because we have a lot of oil sands here in Alberta. I'm not from Alberta, but as a Canadian, it's pretty detrimental. So I think it is going to get worse. We see oil dropping even further. I think we'll have some major level of a pullback. We saw in SPY, there's going to be some fundamental factor that's going to pull it back, but then I do think there's going to be a next flush to maybe even $17 or $15, which is pretty staggering. But in this current market with basically everything shutting down, where is this demand coming from? And also, it's a perpetual cycle, right? Think of all the oil that's used into actually getting oil. Think of all the oil that's used to get oil in America and Alberta. That's a shit ton of oil that they're using, right? In natural gas and all this energy to get more energy. Not only is there no demand coming from the globe, but there's no demand coming from the corporations that are shutting down because there is now the inability to be profitable in this current market because the cost of barrel is so low. So it's a double whammy here for the demand. So I do not see oil bouncing back so strong. So hopefully that answers your question. What's the best silver ticker to invest in? I personally like to hold physical, like we can see right here. This is silver bullion. I like to hold silver and gold bullion. I think owning physical bullion is the best way to invest in it long term. You can get it in a storage facility in Switzerland or Australia or wherever. Or you could just do it by yourself. You got to store it safely and not be an idiot about it and just put it like this is just obviously, I'm not going to put, this is just like 10 ounces. So spot price is $14, so $140 US. But you wouldn't want to put all your silver bullion just randomly out. But that's my primary way. I think that it's a good way to invest. But tickers, to be honest, I don't really know. I like silver bullion. I like physically owning it, and then I also trade silver and gold. But I use CDFs, contracts for differences. Or CFDs, sorry. CFDs, not CDFs. CFDs, contracts for differences. And those are going to be basically futures or contracts. They're not going to be trading the actual asset. You're going to be trading the underlying asset using contracts. And I'm able to leverage. I'm able to set stop losses and their futures. So it's going to be a continuous stream all week instead of the stock market stopping and starting with massive gaps in the market. I do not like equities. I'd rather trade futures or contracts for differences or crypto or FX because they don't have as many gaps. They have weekend gaps. Crypto has no gaps. I personally do not like gaps. I hate them when I'm trading. So I just stick with assets or instruments that allow me to see less of them. So yeah, I can't give you an exact ticker that's going to be the best. I'm not the person that would be giving you the best information on that. But if you're looking to trade silver and gold, I'm your man. But in terms of investments in pure equities, I don't exactly know because I invest in bullion when it comes to the commodities market. Being able to hold it is nice. Are you live or is this a recording? I'm live right now. Yeah, you can ask me any question. I did do a recording for the global macro update for YouTube. I do a crypto market update and a global macro update every single day for weekdays. I don't do it on weekends. And yeah, and then at the end of the video, I'll go over all the questions that were given within the entire video because we cover news and charts. So if you are within the video and if you're coming for another one, we'll do it around the same time. We'll do crypto market update and then global macro. But yeah, any single question that you have, if you post it, I will answer it inevitably. But I'm going through them one by one and trying to give a honest, genuine answer that is able to give some sort of value for the question you're providing. So let's continue on here. JPY USD. That's an interesting one. Yeah, because USD was stronger, but recently the Japanese yen has been stronger. But they're both trading shit tons of stimulus. So yeah, we'll see how it goes. It's like picking two of the lesser evils, or one of the lesser evils, in terms of how much money they're printing. But yeah, I'm not going to do analysis. I don't really trade forex. I trade commodities and crypto mainly, and indexes. I trade SPY, and that's basically it in terms of exposure and what I'm looking at. I don't think it's good to trade like 50 or 100 instruments. It just doesn't make sense to keep track of all of that. Let's continue on with the questions. Stay. Don't really know what you mean. You trade on TD Ameritrade? No, I do not. So for crypto, I trade on Binance and Bybit for derivative exchanges or derivative leverage trading. So if I want to just trade like the actual asset, I'll go on Binance. You can short, long. You can trade over 17 different alts, small cap, large cap. You can borrow up to 3 times. It's a great platform all around. Good liquidity, good UI. I'm very happy with Binance. Bybit's another one that's a good trading software for leverage. If you want to leverage 5, 10, I don't really go beyond. I wouldn't really recommend anyone going beyond 10 because it just racks up the fees. Does not make sense, but it goes up to 100 if you want. And then for my contract for differences, I use CMC Markets. That allows me to trade gold, silver, and SPY leveraged. You can also trade half units, so you can trade instead of a whole SPY share. You can trade half. You can trade half a gold. You can trade 1.25 or whatever the case may be. Obviously, it's a contract, so it's a lot more flexible. So yeah, that's the exchanges and brokerages I use for my trading. And just for straight equities, I use Questrade for trading because it offers level 2 in market data, and I think it's $90 a month, but then every trade's like 5 cents per share or something, so it's not too bad. It doesn't offer free trading, but it's a decent broker. And then for investing, just pure long-term investing, I use Wealthsimple because it has free fees for trading, buying and selling for Canadian stocks. So that is all the stuff I use. And that is all the questions. Thank you very much for coming in and tuning in today. And until next time, happy trading, everyone.